Hi everyone and welcome to Learning Objective 5-1. And so in this learning objective, the objective is to understand how automation has created a data-rich environment where technology helps accountants, auditors, and managers improve the decisions being made. And so we just wrapped up talking about the impact cycle in Module 4. So in Module 4, we concluded by talking about how we can communicate insights, and then based on those insights and the impact model, what outcomes can we track going forward. All right, so the impact cycle, if you remember, was to identify questions, master the data, perform the test plan, address and refine results, communicate insights, track outcomes, and then start the whole process all over again with identify the questions, okay? So we went through that entire process. Now the rest of what we're going to be doing is looking at how this process is used in different disciplines within accounting. All right, and so this module, Module 5, we begin talking about that, and we talk about it in the context of the work that auditors do and the work that managerial accountants do. All right, and then so we'll do a broad overview here in regards to the auditing profession and the managerial profession and how those professions are using data analytics techniques in their work. And then we'll take a deeper dive in subsequent modules and we'll look at more specific procedures that are being done in each of these areas. Okay, so this is an overview of the different parts of the accounting profession and how the different parts of the accounting profession are using technology and data and analytics. And then the following modules will look more closely at each one of these disciplines within accounting. All right, so that's the idea here. All right, so what's going on in the modern data environment? Well, what's going on is automation. And when I say automation, I mean the mass collection of data through automated processes. So, when a customer comes into our store and they buy an item, the item is scanned at the register. There is a loyalty account associated with the item, with the customer that has made that purchase. And so we're tracking the item purchased by the customer, and we're tracking when they purchased it, what location they purchased it in. And so there's all this like metadata, we call it. So it's like demographic data, things regarding time, location, and so we get a sense of our customers' behaviors by collecting all of this data. And all of this data collection is automated through the cash register, for example, in this example that we're talking about, right? So what's happening in the accounting profession is that automation is capturing more and more data. And we have more and more data that we can use to make decisions. So what that means is the auditing profession also has to get proficient at understanding this large volume of data and understanding how to analyze and interpret and identify red flags in that data. So let's step back for a minute. What is auditing? So you may or may not have had an auditing class in your undergraduate studies, but the auditing field, there's two types of auditors, right? So let's start there. There's external auditors and then there's internal auditors, right? So a publicly traded company, a company that has its stock traded on a major stock exchange like the New York Stock Exchange, that company has to produce financial statements. It has to produce a balance sheet, a statement of cash flows, an income statement, and other statements as well. And when they produce these statements, they have to distribute them to the shareholders and to creditors and to other users of financial statements. So they basically have to explain to people interested in the company what the company is doing and how they are performing in regards to accomplishing whatever goals they have. Okay? So if you take money from investors in the public markets, you have to disclose to them what you're doing with the money. That's the idea. All right? Now the issue is, well, how do you know, if you're an investor, how do you know that the company that you've given money to, the company you've invested in, how do you know whether or not they're being honest in their financial statements? Maybe they want to portray themselves as doing a great job when actually they're screwing off and they didn't do a very good job this year. because they don't want investors to see that they're not doing a very good job. They're not using the investors' money in the right ways. Okay? So we have an issue here. We have, on the one hand side, we have the managers want to show the investors that they're doing a good job. But on the other side, the investors want a truthful report. So how do we assure that the financial statements are fair and accurate? How do we make sure that the creditors, the investors, other users of financial statements, how do we make sure they're getting financial statements that are fair and accurate? Well, we hire an independent third party. We hire an external auditor. So when we say they're independent, they're neither a shareholder in the company, and they are also not an employee of the company. So there's somebody completely outside of the company, somebody outside of the relationship between investors and managers, and they come in, they check the financial statements, and they provide an opinion about its fairness and its accuracy. Okay? So that's what the external auditing profession does. The external auditing profession is independent. They are coming in to give their blessing to the financial statements and say, hey, investor, you can trust what management is saying here. Now, on the other side, we have internal auditors, and internal auditors do similar work, but they are employees of the company itself. Right? So their focus is to improve operating efficiency in the business. And specifically, the things that they are focused on are process efficiency and effectiveness. They're interested in governance. So governance is how the company is run. So governance, risk, compliance with laws and regulations, including internal controls. They're also interested in IT and IT audits. So they want to make sure the information technology system is operating effectively. They're also interested in performing what's called forensic audits if there are cases of fraud. So white-collar crime, if something happens within the firm, somebody steals money or they steal assets from the company, internal auditors will go and investigate how it happened and why there were controls in place to prevent it from happening. Okay? And then finally, internal auditors they support the financial statement audit. So when the financial statements are audited by the external auditor, ideally, your internal auditor has looked at those financial statements first so that everything goes smoothly with the external auditor. All right? So that is what is going on in these two fields right now. We have a lot of new data that's available, new data that's being collected through automation, and both internal and external auditors need to be able to need to have proficiency so that they can analyze and interpret and identify red flags that are in the data. All right. So this was Learning Objective 5-1. Thank you for watching. I'll see you real soon. Take care.